Welcome back. Well, COVID-19 wreaked havoc on so many industries, but now as life begins to return to some sort of normal, some workers could be about to enjoy a major post-pandemic pay rise.
Yeah, Aussies could see their annual salary jump 20% due to the national skills shortage, with border closures preventing overseas talent from entering the country. Experts say employers will be forced to throw money at their staff to keep them in a job. Good news. Weekend Sunrise Money expert Scott Phillips is here with us. Scott, good morning to you. Some experts are saying that could be an $80,000 a year pay rise for some industries.
Mark Mon, good morning. That's the good news, I suppose, for the borders still being closed, at least internationally, at least for a little bit longer, is the unemployment rate is predicted to go below 4% next year under some numbers. If it does, you can pretty much name your own price to stay in your job or to go and get another job. And that's where it comes down to. There's up to 20 or 30% increases to do the same job for a different employer when they're desperate for staff. That hopefully gives you a chance to go back to the boss and say, hey, I'm worth a little bit more money, please.
It'll obviously vary, though, won't it?
Does.
But depending on the job and where the demand is.
Look, the good news is at that sort of unemployment rate, it should be reasonably widespread, but specific skills are the ones that are going to be in highest demand. So data security, cyber security, analytics, investment banking, for those of us who are investment bankers. That's the opportunity, I think, if you're in some of those jobs. But in general, if unemployment's under 4%, you can almost pretty much assume most jobs, there's going to be some wage pressure. Hopefully, for all of us, we might be getting a little bit more by this time next year.
Scott, there was a lot of talk about interest rates this week. Will they go up? When will they go up? What will happen? How do you see it?
Yeah, so we don't know the answer, of course, but yes, they will go up at some point soon. The RBA is still saying the end of 2023. That's been their line now for 12 months. The market predicting basically this time next year, so a year earlier than the RBA itself. It's a really good time to look at fixed home loan rates in particular because they're already starting to go up. So if you're looking to fix, now is a really good time to have that conversation with your broker, with your bank manager, because they will be going up. There's pressure from overseas and there's pressure here at home as well.
Can you just remind everyone, because when we hear, oh, you should shop around or, find out what else, how do people actually go about doing that? Does it mean set aside a day to be on the phone and harass people?
Not necessarily. The quickest way to do it is to either go to a broker themselves, they look, just what can I get? The other is just jump online. Go to one of those comparison websites, grab your last bank statement, find out how much you're paying, then go to those comparison sites, find out how much you can get, and then start making some phone calls. One, the easiest one is to your own bank. Look, I'm paying this. I know this is out there. What can you do? You might be lucky enough to say, actually, we can fix it here for you on the phone, a 5-minute job and you're done. You may have to go through some paperwork, but you could be saving $5,000, $10,000 a year. It's definitely worthwhile.
Wow.
A big move by the Commonwealth Bank this week, taking on board cryptocurrency.
Yeah.
And it's almost sort of legitimises it to the mainstream public, if you like. What does it all mean? Is cryptocurrency here to stay? Is it going to become more widespread? Well, we all have it.
It's here for a while. The Commonwealth Bank are the first big Australian bank to say, yep, you can use our app to put cryptocurrencies, buy and sell them, which is good for people who haven't known how to do it, what to do, whether it's safe. Doesn't mean it's necessarily worth doing, though. I think it's still, we want to be a little bit careful here. The price was all over the place. It fluctuates wildly. This isn't another currency like an Australian dollar. You can assume you're going to be getting $1 back in a couple of years' time. Maybe it goes up a lot. Maybe it falls by a lot. We don't yet know. So it's not one to be playing with. If you are a sophisticated investor, if you want to add a little bit to your portfolio, I guess I could see that. But right now, leave it alone for a little bit longer and wait till things settle. Then we can work out whether it's worth owning.
Scotty, a question without notice.
Shoot.
During the week, I was busy making breakfast, making the lunches, getting the kids ready for school, and my 9-year-old daughter said, Mum, what's Bitcoin?
That's awesome.
So I thought if you explained it...
She's listening now.
That she would understand,
awesome.
that I might understand. I mean, how do you now say it if people want to know what a cryptocurrency is?
Oh, man, so it's so difficult, right? Basically, it's a digital currency. So think about internet banking. When you take some money and transfer it from your account to the telephone company, you don't actually see the money, right? It goes digitally from you to them. It's another version of that. Think about it like another, the Australian dollar, the US dollar. Bitcoin is, in theory, just another way to capture and keep your money. The problem is no one knows really what it's worth. And so it's super volatile. It fluctuates all over the place. So it's part investment, part currency. Just tell her to stick with saving your money in Australian dollars for now and worry about it in a couple of years' time.
Look at foreign markets down the track.
She currently has $2.43.
That's a start. That's a start.
That's a fortune in crypto.
There you go, Poppy. You happy with that? Thank you so much, Scotty. As always, excellent.